Thank you very much for attending. Thank you very much for kind of volunteering. I think I just had to use a knife for making you volunteer. No, Jan is, and you please introduce yourself. Jan is an excellent specialist. You will learn that quickly when we speak global ocean. I mean, he has a professional background, which is United Nations, UNCTAD. So he has a specific angle for looking at our field of, say, corporate decisions on how to optimize ocean procurement. But his work is fact-based, and as always, it makes a lot of sense to change perspective and to listen to a man or woman who understands his or her business. That's never time wasted. And in that spirit, I would like to open the stage for you. Perhaps one comment to start. We invited Jan to give the United Nations view on the demand and supply situation at the moment. The audience may be surprised, but these ladies and gentlemen in Geneva are observing that and with very interesting facts to show. And the second point, we will either listen to him or draw him into a Q&A, is what his outlook for the, say, mid and long-term future are. CO2 is just one of the elements here. But enough of that, and no more ado. Please, the stage is yours.
Yeah, excellent. I'll share my screen in a second, and really happy to be with you. After all, it is your taxes who pay my salary. So I have now started the sharing screen, make it full, and will speak with you about demand and supply in maritime transport, where we are, how we got there, and where we might head next. So let's start off where we are. Just one slide, which I think complements what you have seen already this morning. This is a spot rate. Of course, many of you and the shippers pay negotiated rates, but this is still quite an interesting trend. I think you have seen two of those routes. Why am I putting this up? First, to see a bit the long-term trend and really how extremely high the rates are at present. Out of those 6 rates I've picked here, 4 are at historical highs and the other 2 also practically at historical heights. I think there are 2 particularly interesting points here to discuss, to question. First, why do some routes move up more than others? And this has to do with a number of things, with imbalances, with the price of the container. So if I think Mr. Klippel mentioned it earlier, especially the example, like if it's a long and thin route and I have to go to Santos or to West Africa and I don't have return cargo and I have to pay for the container, the cost of using a container for additional days, also for the return journey. So this, I think, explains why here the Shanghai, South America, Shanghai, Lagos is particularly high. The second thing I want to highlight here is this little peak of going back up again after the Ever Given incident in Suez. And I mean, there was a lot of hype about this event, but we can really see how it moved back up again, and also on the routes that do not go through Suez. It just shows how interconnected this whole business is. And if there are containers, boxes waiting in the Mediterranean or in front of Los Angeles and don't get back to Shanghai in time, and there are not enough empty boxes in Shanghai, then also those routes that do not go through Suez, like to South America or West Africa, they also go up. So that is a little update where we are. Of course, the underlying reasons of why this went up has to do with COVID and a number of things. So let us look at like how we got there. 3 thoughts about shipping supply, about demand, about costs. On the supply side, we have seen some of similar charts here, also about Rotterdam just now. So here I'm contrasting the number of companies, shipping companies that provide services from and to Germany, for example. This has gone down from, I think, 97 or 95 something to less than 40, while the ship sizes have gone up. This is really two sides of the same coin. And you can show the same thing with a little video. Every dot in this video is a port. And we see how these circles, bubbles, increase in size over the last 16 years and get darker as we illustrated like this. So ships deployed from into the almost 1,000 ports that we have in this database increase. You can also show it as a distribution. I hope you like it. I like these histograms. You can see how the biggest ship goes up, how the 50%, the median goes up, the mean goes up. There's really a very skewed distribution. 50% of the ports in the world receive today ships like the median, the 50% point, of only 1,800 TEU or lower. And the other side of the same coin is the number of companies that provide services from and to the countries. And here it goes down. Here we have fewer companies per port, a process of concentration. There too, we have the distribution, which I find really interesting. The large majority of ports, and this is constant here, the median, the 50% of ports only receive 3 or fewer companies, or receive services from 3 or fewer companies. And this is then, if you are a shipper that depends on this port, you have only 3 to choose from. So we had discussed a little bit now, moving from the supply to the demand side, why did seaborne container trade actually not decline as much as we thought? It was mentioned several times, and we in UNCTAD also, when we wrote our last review of maritime transport, we had to correct and adjust our forecasts, which we did end of last year, again and again. The traditional, the old GDP to trade ratio of the past has changed. And we have also more services in the GDP, not so much goods. So while we are in lockdown, that's the third point here, while we are in lockdown and no longer go to the hairdresser, restaurant, and movies, we then buy more stuff. And this combined with the stimulus package. So just to confirm, it was mentioned, but this is very much in line also with the global analysis that we are doing here in UNCTAD. And then what about the prices? Why did they go up so much? Some of this was mentioned. I just really want to confirm that in times of COVID, the main routes changed. Boxes were not where they were needed. Carriers skipped port calls. Boxes were left behind. At the beginning of the pandemic, I do want to highlight, we do not see what was said, the blank sailings and like capacity management. There's no idle capacity at this moment. There's waiting capacity, and capacity is stuck, but no idle capacity. Then the direct COVID impact, the handling in ports and internet slows down, and different sources have calculated that there's like, you need, the typical container spends about 20% longer in the system, and that means you would need 20% more containers, and they're not there yet. And we saw the interesting charts, they are correct. Also the forecast that there will be more containers built this year, but it takes time. Trade imbalances worsened, no empty boxes are left in China. And then this fifth and last point, I'm just saying, yes, carriers benefit from the high freight rates. You have seen the interesting numbers now about the high profit margins and rates of return. Would this be different? That's really a question, serious question. I think the answer is no, but we are not sure whether these high rates and margins would be different if we had less concentration, if we had less these mergers and alliances. Because some people say that the carriers are abusing their strong market power. I personally think we have had similar booms in freight rates with the BDI in dry bulk. We had it in oil, we had it in LNG. also in other markets, if there's not enough boxes or ships around, demand at the short term at least is very inelastic, freight rates go up. So where are we heading next? Again, I'll go through a bit supply, demand, and costs. On the supply side, we see ships remain big, but we haven't really seen another scale like from 24 to 27 or like it goes 28 TEU bigger is the next big ship that was yesterday in the yesterday in the news. So yes, ships will continue to grow, but not quite as much. But through the cascading effect, of course, the average size will continue to go up. Now I'll come back to this on the supply side. Now, one big thing that is happening is the energy transition. It's the decarbonization. And at least in the short term, this will lead to ships going slower. We in UNCTAD, we have just done an impact assessment for the International Maritime Organization. Existing ships, if they want to achieve the goals developed by the IMO, let's say I have to emit less CO2 per ton mile, the easiest way is to go slower. And if ships go slower, like 10, 15% on average slower, we need more ships for the same capacity, for the same trade. And what if not all ships are built? Because, for example, uncertainty about what fuels should I use and what should I invest? What about COVID or not? There's a lot of uncertainty that requires a higher risk premium. So there may not be enough supply and freight rates will go up further. Here I'm talking about a time frame. This short-term IMO measure is up to 2030. So let's look at demand. And here I'm very happy to share with you just yesterday published UNCTAD forecast. So the red line is the current scenario. The good news is we are getting out of the recession faster than the previous recessions. And here you have a forecast of growth in trade. This is trade in goods, merchandise trade, and you see the forecasted freight rates there up to plus 7.5%, 8% over the next year. So that's a little forecast sharing with you. This also came out yesterday. I find this quite interesting. Maybe also I'm putting it here for the shippers to see which segments are growing. And what do we compare it with the 2021, the latest quarter where we have data? If we compare it with last year, it may be a bit distorted. The growth is very high because last year we had the decline, the starting of the pandemic. So maybe it's better to compare with 2019, which is the blue, and there you can see, yeah, the growth in several is not quite as high. Pharmaceuticals, of course, already started trading more 1 year ago. And the two that go down is transport equipment and energy. And of course, these slides will be shared afterwards with you. One other, going back to forecasts, this one was launched 2 days ago by the International Transport Forum. I was on a panel where we were discussing this not in Leipzig, but online. Quite impressive here. This is up to 2050. So earlier I had a time frame 2030, here 2050 projection, and you see there's a variance. If you go to there's 2030, there's 2050 to the right, different scenarios, but in all scenarios there's still a lot of growth in goods being moved by shipping, and I think that's overall good news for us, for you. Third and last point, a bit this sustainability, this decarbonization issue. Last year we published this chart which shows the upper lines, the non-dotted lines, how the fleet has been growing, and the dotted lines, how the emissions have been growing. So the good news is emissions have been growing less than the fleet, but the bad news is it is still growing. So what happens if we really now want to reduce the emissions? And there the IMO next month is expected to agree on so-called short-term measure, short-term meaning up to 2030, meaning measures for the existing fleet, which then lead to ships having to react, investing in technologies, new coatings, energy-saving technologies, but also going slower. So there, UNCTAD undertook an impact assessment. Oh, sorry, that circle should be around the 2030 and to highlight. So what we are comparing here is the 2030 scenario with or without the IMO measures. Without looking at the different scenarios on which case EEXI only, high, low ambition, the main point here is the time at sea will go up, and it will go, I mean, ships are already slowing down. They will slow down even more if they want to reduce the emissions, and the costs will go up. So more time and higher costs during the energy transition. Let me sum up and then open to discuss, and you may correct and question, and really very open to discussion. The long wave, I would say higher rates are here to stay. During many years, carriers lost money because they were investing in ever bigger ships to reduce their marginal costs. But while they invested in ever bigger ships, there was overcapacity because the smaller, older ships were not taken from the market. They were sold, they were given back to the charterers. So for a very, very long shipping cycle, freight rates went down. Now, if we assume that there will not be another scaling up of really significantly bigger ships, and this overcapacity will not continue, then higher rates are to stay. Consolidation will also stay. And I had shown you these little videos, the two sides of the same coin. I think we have reached a level, yes, where whatever carriers can do in terms of capacity management in alliances and also like not losing money, higher rates will stay. During the energy transition, I just showed you this one table from our UNCTAD assessment. We do expect higher rates and lower speeds, but I hate ending on a pessimistic note. After the energy transition, and that's really very long term, but once we really manage this power to X to work with renewable energies, actually the marginal cost will go down. And if the marginal cost due to lower marginal energy costs, and here I don't know whether I'm talking about in 20 years or in 50 years, but once we have managed the energy transition on which we are working in different UN and Paris and IMO and so on, once we have achieved this, then the costs of producing transport, of using energy will go down. And actually this will also mean that speeds will go up because speed is very much associated with energy costs. That's from my side. So I guess I'll stop sharing screen, if I'm not mistaken, and be back with you, or you just take out the shared screen.
Hello, Jan. Excellent, to the point. I think my audience is my witness. I did not overpromise. Also, I was wondering, listening to you, if we shouldn't better stop you because you started scaring us by telling us or by sharing reasons why the rates will keep going up, and that's not what we want to hear.
Yeah, sorry.
Maybe you reconsider. No, I'm joking here. I mean, what are the two shocking good news? The one shocking good news is that you say, well, from a macroeconomic point of view, the world comes out of the crisis on a faster pace than expected. That's good for us as taxpayers, as we say, running chemical and automotive and fast-moving consumer good companies. But when it comes to buying, and we address the impact of very high demand and particularly of quickly growing, unexpected demand on the shipping rates, that's at least for the near future to come, a critical statement. Do you see it like that? So demand will be high. We will stay under pressure.
Yes, I think so. And of course, the result of this higher demand was and is the shortage of capacity and higher rates. But come on, the reason is a good reason, that that there is business. And yes, as I said, with hindsight, we are all smarter. We all now know we should have bought empty boxes 1 year ago invested in containers. But we all went back to earlier multipliers and elasticities and crisis, and it was a new experience, this COVID. Overall, I think ports and shipping have reacted quite well. Shipping and ports have actually been more open and continued business than land transport, where the truck drivers were often stuck in many, okay, I'm more speaking here about the African and other developing countries, but really it was stopped at the border, afraid of letting in people. Seafarers are currently the ones who are paying the price, because they are the ones who stay on the ship and cannot do the crewing change. But the trade moves on. And air transport the same, because there are no longer passenger planes, passengers are not flying, so the belly cargo space is also gone. So shipping and ports actually have moved on relatively, resilient.
Yeah, I mean the point we regularly addressed. I don't want to waste your time on that, but what we said here, it's the old example, meaning as the basic situation will not return to an easy life for a procurement manager, for our customers. It really is a different kind of competitive question. I want to be a shipper of choice, so that I at least benefit from the better side of the service, not the worst side, and that the markups I have to face are not markups for punishing customers who, by unpredictability, long demurrage detention times, etc., make the life of the carrier more important. So it's very much a question to understand from my point of view, and we will discuss it the second part of the day a little bit in more detail. If we feel the pain of the carrier, how can I at least limit my suffering as a shipper by taking out some pain points, so that I get the capacity and I do not need to pay as much extra than perhaps my competitor. That's a very interesting point. The other point is not surprising, and you know that we are going to discuss that in more detail also in the afternoon. Is what you say is, and that is in this precision and clarity kind of new, I think, that you say, listen, yes, everybody is speaking about 230. After that, maybe paradise breaks out, but the immediate consequence of what the world has to do will result in a further slowdown of ships. So bad news for supply chains. And slowdown of ships means we take out dynamic capacity. So even the surge in the order book is not changing the world in a 2 or 3 year horizon, or maybe in 2 or 3 years, but 5, 6 years down the road, we will see a tightening again, just because they have to slow down. Because if not slowing down, they will not be able to meet the restrictions. That's what you say, right?
Yes.
Did you figure out already what the cost impact is in container shipping?
Well, in fact, this last little table I showed about what we expect the cost increase. Well, this was comparing 2 scenarios in 2030.
Okay.
But in the report, we also have like 2030 compared to today. This is based on simulations, estimates also done with the DNV. I personally think, if anything, it will rather be worse, because the assumption is that the additional ships that are required will be built. And how do we know that they will all be built? Okay, currently the order book went up again, especially for big ships again, but not bigger than before. But as I said, ship owners, and this is not just in container, but why wouldn't I wait a little bit? Let me wait 1 or 2 more years. I'm making good money right now, and I want to invest in the right thing, knowing, should I go to LNG, which for some time was considered good, but maybe it's not that good. There was a World Bank study saying actually we should not go for LNG. Maybe technological progress will be faster. We can go earlier into hydrogen. So, and as we have seen, there's a tiny little shortage of empty boxes or ships, whatever, and freight rates go through the roof.
Yeah.
So the assumptions and these tables, we have published. This is an official UNCTAD report. We collaborated. That's it. But somewhere at the beginning, there's an assumption that the ships that will be needed will be built.
Yeah, that's what the Americans call a hinge assumption. Yeah, the hinge decides if the door opens or not. So thank you very much. I learned a lot. I should say, as usual, when we invite you, we had the pleasure, I think, 1.5 years ago. And I cannot rule out totally that we will keep inviting you, Jan, and you will please stay on board also this afternoon. What I can say is that we are in close collaboration with DNV. They already were speaking to us a couple of years ago, and on the CO2 topic, we will surely invite them to one of our next annual conferences, the members only piece. So thank you very much.
Thank you.
I now call Clemens and Stefan on deck, so to say, not on stage, on deck. We are in shipping, yes, and we now face the some call $1,000, some call $1 billion question, namely how are freight rates going to develop, pooling the know-how of this distinguished audience we have pleasure to present to. So Clemens, please take over, or Stefan, take over, please.
Yes, let's start with the first question about your expectations. Jonas, can you switch to the first question?
Yeah, ladies and gentlemen, we want to ask you a couple of questions regarding the future. So please go to the Slido button on the bottom right-hand side, or go to the Slido web app and enter the hashtag TimConsult. We heard this morning many things about the things which can affect the trades worldwide, and we want to know you at what level contract rates on the East Asia trades will stabilize, at or above current levels, in between current and 2019 levels, close to 2019 level, or below 2019 levels. Ladies and gentlemen, we will open the poll now. Please vote. Please use the chance to give us your expertise and your opinion.
Yes, let me add one comment. With ex-East Asia trades, we refer to Asia to Europe and Asia to North America. So the both big East-West trades. What do you think? How rates will, or when rates will stabilize? At what level?
As being part of our community, we'll get updates every month, every quarter with updated rates, and the membership within our community is very helpful for your rates, for your procurement.
Jonas, I think you can already start to share the results. Of course, you can.
We keep it open.
We keep it open.
More.
Mm-hmm.
Yes. Ladies and gentlemen, please vote. Want to know your opinion. I want to give you a few seconds more. I would suggest closing the poll, or
Yes, I think we can close the poll.
I will close the poll.
Very interesting results. Most of you, 60% or 59%, expect that the rates will stabilize between the current level and the 2019 level, which is a pre-crisis level. The majority expect somewhat in between these two levels, but almost or more than 1/3, 35% think that we will see a level higher than at the moment. So some of you or 1/3 of you expect a higher or the same level as at the moment. No one, or at least less than 5%, expect that it will be back to 2019, to pre-crisis levels, or even below.
Yeah.
Yes, let's move to the next question.
Yeah, dear community, dear partners, dear interest, we heard many slides about the schedule reliability of Mr. America from Port of Rotterdam and from Clem Chapla, our internal expert, about the schedule reliability and about delays in ports. So we also want to know at what level will global schedule reliability and delay stabilize? What are your expectations? Current level or both, in between current and 2019 levels, close to 2019 or better than 2019? Ladies and gentlemen, I will now open the poll. Please vote, please use your chance. We want to know your expectations. Wow. Very clear picture so far. Schedule reliability and also the device have effects to your supply chain. So we want to know, what do you expect? What do you plan for? What are your probably alternatives? Ladies and gentlemen, please come to an end. Please.
Yes, you can already share the
Yes.
screen. We can keep it open, of course, but
Yes.
have a look on the results, on the preliminary results.
Mm-hmm.
So also very interesting. Most of you, 60%, expect that schedule reliability will stabilize at a level between the current level and the 2019 levels. Only 21% expect it will be close to the pre-crisis levels, and more than 10% expect further decreasing schedule reliability, and just a few of you expect that schedule reliability will be better than 2019. So you are not so optimistic that we will see an improvement of schedule reliability, but more than 50% expect at least that the situation will be better than at the moment in between the current and the 2019 levels. So very interesting. I would have expected that more of you are optimistic that when the situation relaxes, that schedule reliability will improve stronger, but very interesting.
Let us take a short view to the general market situation, to the demand, to the rate level. Also on the ex-Asia trades now, we want to know, when do you expect the market situation, that means demand rate levels, stabilizing on the ex-East Asia rates? Is it in Q3 2021, Q4 2021, Q1 2022, or probably later? Ladies and gentlemen, I will now open the poll. Please vote. Please use your chance. We want to know your expectations.
So we refer, of course, also to Asia, Europe, and Asia to North America trades. What do you think? When will rates stabilize?
We'll now show you the results, but the poll is still open. We can see a very mixed picture at the current time.
I mean, for those of you who regularly attend, they may be surprised, because in the past years we asked for specific trades for your specific expectations. So rates going up 5 to 10% or down 10 to 20 this year, and given the turbulences we face, we took it for a little bit overblown. So it's a rather indirect way of asking, following the line of the whole conference. When we'll say more or less normal stroke pre-crisis situations return, please interpret the question for the timing in that respect.
Ladies and gentlemen, use your chance. Björn and Stefan, I would suggest to close that in a few seconds. What do you think?
Yes, I can think we can close.
Yeah, ladies and gentlemen, coming to an end.
Okay.
I will now close the poll. Yeah.
So very interesting results. Almost 40% of you expect stabilization in Q1 22, and more than 30% even later. So in addition, about 70% of you expect not a relaxation or stabilization of rate levels and demand in this year. So only 26% expect that rates will stabilize in Q4, and even less of you that situation will relax very soon. So you are not so optimistic for improvement of the situation in 2021. So you expect situation will get better earliest in Q1 2020.
I hope we did not scare our attendants too much, Stefan. Yes, because I remember myself saying in Q4 last year, we will see improvements Q2 21 latest. I mean, as Jan said, from hindsight, we are much smarter than before. And with all what we see, particularly knowing that the capacity expansion will not become effective this year on one side, and on the other side, now we experience that demand is picking up, that the container challenges keep on existing. I think it is very understandable that our audience is indeed more pessimistic than perhaps they have been and we have been a couple of months back. Interesting to consider what that means for our tendering. I mean, one information I can share, this is a question we are going to discuss after lunch. There are, say, propositions on the table coming from carriers to now conclude deals and freeze rates for more than 1 year. Yes, and if there are no altruists, there is a fair chance that they are altruistic, but in case not, this could be an indication that they also assume that the world will start changing in 2020. But again, these are very weak signals. We will discuss what that means. Very good. Are we at the end, Stefan?
I think we have one question left, Jonas.
Okay.
Yes.
Yes, the same question about the your expectations about the development of the transatlantic.
Mm-hmm.
The poll is now open, ladies and gentlemen. It's the last question for you. We would want to know your expectations for the transatlantic.
I mean, the hike started later, is not as aggressive as on the Trans-Pacific, but say we saw it slowly coming. You, the experts, also saw it slowly coming. The spot rates went through the roof recently, so it is indeed a question: is it just a blimp, or is it a change that will keep living for some time? Very interesting question.
The results are also very interesting so far.
And show them to us.
Yeah.
Yeah. But the poll is still open, so
Yeah.
vote.
Okay.
Ladies and gentlemen.
Mm-hmm. Looks like a hot summer for transatlantic shippers, right? Woo! No clear picture. I mean, one thing seems to be clear. In July, August, September, not so much of a solution ahead. Now, very interesting. Please. Mm-hmm. 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 I mean, from a community work point of view, if such, say, votes are not clear, these are the most interesting ones, because if one group of experts expect the one and the other group of experts expect the other, it is very fruitful to exchange on the assumptions underlying. Because if everybody is of the same opinion, it's not guaranteed that the opinion proved right, but there is less to discuss and learn in the first place, of course. So I'm looking forward to dive deeper on the transatlantic piece in the afternoon. Very interesting. And as Jonas said, we are continuously monitoring rate developments on a monthly basis, where possible broken down onto industries, onto NVO business and carriers business. Where possible means we have, of course, to respect statistical quality and compliance topics. Statistical quality, say other market companions are not handling with that care, but we cannot do differently. So we are close to these markets, and the invitation to our customers is, please consult Stefan, Clemens and their teams regularly, because we are happy to share on that. Or look it up in the web-based tool we provide. Okay, let's close it.
Yes, I would suggest, and it is closed. So, ladies and gentlemen, this was the last question for you as a potential and as an interest for this morning. Our community will have some more questions later this day. As Björn and as all other colleagues said, being a part of our community is a benefit for you. I will tell Björn. Yeah.
You convinced me, Jonas. So let's move forward. I think Clemens is coming on stage.
Yes, thank you.
Oh, for the closing words before I say goodbye, please.
Before the closing words, we have a lot of good questions. We can't answer all of them. Maybe we can do 2 or 3 now. And I think for the rest, I would also already like to advise that we are opening a lounge after the event where you are able to continue discussions about these topics. Please continue respecting the Chatham House rules. Not mentioning any rates or service providers' names. Moderation, can we put on maybe the question about container production first? In which countries are the biggest container manufacturers located? That is almost exclusively a Chinese business today. And maybe because it fits very much the question of Segun about boxes. I think that's not so much a question, but a very good recommendation. I think we should forward that to the European Shipping Council, because indeed, I share that opinion that a lot of the problems that we are seeing, of course, ship capacity is tight. That is an issue, but it's certainly made significantly worse by a lack of empty containers. So any measure by governments to boost the production of empty containers, that would certainly be helpful. Might be problematic as we have also having high steel prices at the moment, but still, I think that would be one way to elevate the situation without too much government interference in markets. Very good recommendation. And maybe final question, can we take the one from Antoine? When do you recommend? When do we recommend to launch negotiations for 2022? That's a very tricky one. So actually, I will concentrate more on the second half. When to launch the tender, I think you have now heard the opinion of people. I mean, most of them are not expecting a quick turnaround, but of course, if you can time your negotiations so that you hit the immediate post-turnaround stage, that would be perfect. But what I can comment on is what contract validity we recommend. What we are hearing from carriers and from also from companies currently negotiating is that actually carriers are very much pushing for yearly contracts. Interesting. They want to or even multi-year contracts. Some, especially, that's no secret, that's an official policy, so I can name the provider. Maersk wants to use the situation to really build lasting partnerships, offering multi-year contracts. So it's, at the moment, it's rather difficult actually to go through with a 6 months contract. That's one thing that has changed over the past 2-3 months. Before that, that would have been the strategy we recommend, but at the moment, it's really hard to achieve acceptable rate levels with a short-term contract.
Yeah, the common practice, and in the past, we have reasons to say the best practice was indeed do a good process, have a sound strategy, a carrier portfolio wide enough, a yearly contract, a decent fuel clause, and that's proven for many reasons as a good policy. And our big shippers, I mean the average customer in the community, in the MI community, is shipping 100,000 TEU from say 4,000 the smallest to 700,000 the biggest. But this bunch of companies is still in a yearly cycle. And what is even more important, nobody ever went away in the last 20 years when having arrived there, and those who are under different schemes when they entered the community after observing their results, change to a yearly. So I would dare to say, if properly done for many reasons, a fair price model, a fair commitment on time, when do I have to freeze bookings, etc., and on volumes, that is still, say, somewhere in the middle of the road towards a very good practice. But my invitation, Antoine, is, like to others of you, to discuss that is only possible under, say, taking into account where you are coming from, what your legacy is. Are you in the hand of forwarders? Are you dealing with 3 carriers today for your 60,000 TU, or have you a portfolio of 12 carriers in operation? So it depends a lot on the specific situation. And just as we say, to just monitor rates and call it a benchmarking is nice, but not really useful. And in the same form, please see it from that angle. We hesitate to give general rulings because life is much too colorful and too difficult to do that. And if you are going LATAM or Australia mainly, the recommendation is surely different to if you are a trans-Pacific shipper. So please come to us. We have some comments to make. Please make use of that.